Hey guys, can you hear me? Hi Dino.
Hey, how's it going?
Hey Dino.
Can you guys hear me?
Yep.
Yeah.
Okay, good.
Cool.
How are you guys?
Yeah, we're well. We're well, thank you. I'm just checking to make sure the live stream is good. Just give me 1 second.
Sure. It's a good day to talk about crypto, I guess.
Yeah.
It's been an interesting day.
Pretty interesting, yeah.
Yeah. I'd like to hear some insights, Dino.
I'm sure you would. Yeah. Honestly, it's been a crazy 36 hours or so. So I'll share probably during the stream. I think I mentioned it to you already that there have definitely been some indicators that this might happen just based on the relationship between the stable coins and Bitcoin over the last maybe 7 days or so. Currently, I'm looking at the charts. There are now finally, at least in our data, starting to appear some warning signs for Bitcoin specifically that might indicate at least a short-term correction, that this might be an interim top, both in terms of the social data for Bitcoin as well as on-chain data for Bitcoin. There are some early warning indicators. But yeah, yeah.
Wait, maybe we'll just let Alvin, when he's ready, to kick it off, and then
Sounds
we'll
good.
jump into it. Cool.
Sounds good.
All right. Good evening, everybody. Hope you guys can hear us loud and clear. I see some of you guys streaming in. It's almost like a physical session where we get people streaming into our live stream. Those of you on Facebook and YouTube, welcome. Thanks for joining us. Tonight, we actually do have a very interesting topic. I guess we've always been very traditional in stocks and now into crypto as well. And I guess that's always been the question, right? Is the crypto market more transparent? So though that we hear a lot of can we trust Bitcoin? Is stocks better, right? And tonight we actually have a very special guest, Dino. He's actually head of content at Sentiment. Just want to confirm it's not SEN, it's SAN.
That's right.
So it's I guess it's the play of words, right?
Yep.
And Sentiment, I believe you guys raised an ICO back in 2017, am I right? Or 18?
Yeah, 2017.
Yeah, so you guys raised an ICO of about $12 million equivalent back then, am I right?
About that, yep.
Yeah. And so they're actually a project that actually tracks crypto, right? And it's almost like equities. For us at ET, we track stocks, right? And they track crypto. So they have a very interesting project. And then tonight we're going to be discussing that. Now, before we start, I just want to make a couple of announcements. So tonight we will be talking about crypto, and now crypto is now a legal asset class according to SC. So it's a regulated security. So whatever we discuss, this is just a disclaimer. It is not to entice you to buy, sell, or do anything. This is purely educational purposes. Yeah. So for those of you who have not signed up at our ET online campus, as you know, we started this project on April the 6th. So we are now at 24 days into it. We are looking to help raise money for charities due to the COVID situation. A lot of us are on lockdown. I think we're now in the 5th or 6th week of our lockdown. And what we wanted to highlight was that daily wage earners have been quite affected. Yeah. And this extended lockdown is actually not it's quite a humanitarian crisis, right? A lot of things we don't see. So what we've done at Equities Tracker is that we've actually, in exchange for your generosity and to highlight this plight of just 100 ringgit donation, we will give you guys free access to our e-learning, right, during this lockdown period. So far, we have actually raised 132,000 of the 250,000 that we were hoping to raise. So I'd like to thank all of you generous contributors, right? So as part of this program, you donate at least 100 ringgit. All you need to do is go to charity.equitiestracker.com. All the details are there. Please don't send us any money. All we want is just a receipt of a donation to any charity. If you cannot think of a charity to donate to, we actually have a list of suggested charities that you can donate, right? With that 100 ringgit donation, you also get to bring along 3 friends. So it's you plus 3 friends. So if you take 100 ringgit divided by 4, it is a 25 ringgit donation each to come and learn on the ET Online Campus. Now, ET Online Campus is actually a Facebook group, a private Facebook group. So after you've done your donation, you just have to request to join. And after you have joined, you need to invite your 3 friends. Yeah. Do give us a 24-hour turnaround time after you've donated for us to process your application. In the 3.5 weeks, we now have over 1,800 members in that Facebook group. I hope you guys have learned something. All the sessions are recorded. This is also a continuous education process that we are doing, which means that myself and Benny will be running a 1-hour mentoring session each week while we are on lockdown. And we hope to continue that after the lockdown as well. And the 2 courses that you will get access to is actually value investing and also chart analysis run by my colleague, Mr. Benny Lee. He's on a break tonight, but we will be back tomorrow night, okay? Now, I know today is the last day for those of you who signed up for a trial account. So for you who are lucky enough, you sign up early in March or mid-March, you would have gotten access for a good 6 weeks. You would have attended our ET Online Campus. So we've given out a lot of free goodies, and we get a lot of questions regarding what is that package. Now, we do apologize for the delay. Please note that we are working extremely hard on the back end because we have never offered our packages online before. All of these packages were actually part of a education program whilst we are not on lockdown. Okay, so we had to update a lot of the back end for us to make sure that this happens for you. We'll just go through very quickly. So if your subscription expires on the 30th, you would have received a WhatsApp message or an email. Okay, if you're not able to click on the link or you have an issue, send us a message on WhatsApp or give us a call or send us an email at hello.equitiestracker.com. I repeat, hello.equitiestracker.com. If you have yet to sign up for free trial, we are still offering free sessions, right? All you have to do is send us a WhatsApp at 603-8408-2070. Okay. So I'm going to just very quickly, Dino, if you don't mind, I want to take 2 minutes just to talk about our subscription packages with our viewers out there who have just joined us. So if you still haven't signed up, you can still send us a WhatsApp and you still get a 14-day free trial, right? So if you set up an account post 18th of April, that will be extended to make sure you get at least 14 days of access, right? So if you sign up on the 20th, it'll be 20th plus 14 days, right? So your subscription won't end today, right? For those of you who have just ended, so we have actually just launched our package, and I just want to quickly talk about it. We've called it the Genius Package, right? So we want to make you a stock market genius. So how do we make you a stock market genius, right? As you have realized, if you have created a free account and you've gone through our ET Online Campus, you're going to realize why being factual is very, very important in investing, right? And in fact, today's topic, we're going to talk about how do we look at facts, right? Or to make data-driven investment decisions. Now, the whole idea here is so that you can become a more informed investor, all right? So as you can see, you get access to all our 10-year archives. You get access to all the screeners, you get access to all the subsectors, right? This is part of that combo package. So this is a combo package. So we included everything in it. It's all bundled. So there's really nothing else to upgrade to, right? We see a lot of packages where you start off this small and then when you want to use a function, they start, adding more and more stuff onto that. That's not what we're going to do. So you get literally everything, whatever you've been using, you get to use it. Now, every genius also needs a sidekick. So not only do you need a platform to actually look for stocks, you would need a portfolio manager. So our portfolio manager is known as Sidekick, right? This is where you can track up to 5 portfolios, and you get unlimited transactions in how many stocks or dividends or whatever you're gonna put into this portfolio, right? So I mentioned in the ET Online Campus that that if you find good stocks, you actually need to manage the portfolio. The quantity portion is where this Sidekick actually helps you ease all that. And if you've got 2 or 3 broking accounts, this actually consolidates everything into one section just for you, right? We use it ourselves. In fact, we can't imagine investing without having a Sidekick, all right? Now, what we've actually added a new bonus, this is brand new. So using our data analytics with a 10,000 portfolio, which we're gonna start tomorrow. I know a lot of you guys were asking us to set up a COVID-19 portfolio. So we're actually gonna set up a portfolio, a purpose portfolio, which only 10K. And we're gonna use all that data that we have generated to find a portfolio. So that is also included in this combo package, right? So you get a genius portfolio, right? Now, on top of that, I think a lot of what you guys have seen in the last 30 plus 40 days of seeing us every night is that you realize that when we do research, we go deep. News is not analysis. News is news. Analysis is analysis. Analysis takes time. And if you guys would have flavored some of the reports. If you still haven't, it's actually in the ET Online Campus under units. I've actually uploaded 6 actual reports that we've done on LSOF, on GFTech, and so on Top Glove, and so on and so forth. That's something that you guys also get. So this is something that we do once a month. On top of that, I believe you guys would have seen at least over, I counted, I think I lost count, but we've got over more than 10 CEOs in the last 30 days to join us on KopiTime. So a lot of what we do is that we actually we invite these CEOs, or we do our own analysis, and these sessions are for subscribers only. So very early of this month, if you realize, we actually interviewed Top Glove, and that's only for our subscribers. We had a chat with the CFO or Executive Director of Top Glove, Mr. Lim Chong Guan. And those who were lucky enough to join us on KopiTime and actually looked at Notion VTech, you would have probably made some good gains if you had watched that episode and made some action, right? So we bring you all these insights and research, and that's really what it is. It's a very simple package. It's only really one price. So you can either choose to pay monthly, right? So if you pay monthly, there's no commitment, right? So every month it auto renews, right? You can cancel, you can stop that subscription anytime. Or you can actually sign up for 1 full year. It's a 1-year contract, and we actually give you about 20% discount, right? So what we normally price this at 295 is actually come down to 200 per month if you pay 1 year in advance. So you have to really there's only 2 options to choose from. It's very easy. So all you need to do is click on the link that you've been sent either in your email or on your WhatsApp. Just click on that. And that should easily get you through. Again, if you can't get through us, you want to talk to us, give us a call, send us an email, right? Now, we actually have a very special announcement because we're launching it today, right? Or soft launch, because so what we're going to be actually doing is that for the first 50 who sign up for our 1-year plan, we're going to, I know a lot of requests, we get a lot of requests for t-shirts, right? So we're going to send you a t-shirt for the first 50 of you guys, and Andrew's wearing one as well. The first 50, right, who sign up for 1-year package, that t-shirt is yours. But you have to be patient. We'll send it to you after the MCO have been lifted. All right. That's all for me. So what we're going to do is we're going to get started and have a good chat with Dino regarding crypto. For those of you who are not aware, crypto has also performed fairly well in the last 6 weeks. I think if you purely just look at Bitcoin itself, you definitely would have made money as well, right? So this is, again, in Malaysia, we have 3 approved digital asset exchanges, right, that you actually can buy crypto. So it's not a Ponzi scheme, it is real. It is actually a legitimate asset, so you can actually buy this from a local exchange. All right. So let's sort of kick started. Andrew, you wanna kickstart with this?
Yeah, sure. Okay. First off, Dino, thanks for joining us all the way from Europe.
Pleasure.
Yeah. It's certainly been an interesting day, hasn't it? Alvin mentioned that Bitcoin would have, or Bitcoin or crypto, you would have made money. In fact, if you bought in the morning here and you sold in the afternoon, you would have made quite a lot of money. And then if you shorted it from the afternoon to now, you would have made even more. But so look, Dino's from Sentiment. As Alvin mentioned, it's a project that ICO'd in 2017, and what you guys do are kind of similar to what we do, except in the crypto space, right? So you do including sentiment analysis. That's something that we don't do, and hence Sentiment, right? Clever play with words. So Dino, I'll hand it over to you, and I'll let you introduce yourself, Sentiment, what Sentiment does, and then I'll let you tell us a little bit about your platform.
Sure. First of all, thanks for having me, and hello to everyone joining the stream. So as you guys already mentioned, my name is Dino. I am head of content at Sentiment. I also do a lot of market analysis, all revolving cryptocurrencies. So just a bit about what we do, and I do think that there's quite a bit of parallels between Equities Tracker and Sentiment, just in different niches. Sentiment was founded in 2017 with a pretty simple idea. That idea is that pricing data in cryptocurrencies is over relied on, and is not. It probably shouldn't be so, due to the fact that given the young market that cryptocurrencies still are, I think there's too much unknowables about traditional pricing data, and too many unreliabilities. For example, on a daily basis, even in 2020, we see quite a bit of wash trading, pump and dump schemes, whale manipulation, pretty much all of the sort of common factors with young markets like crypto. So what we realized very early on is that a lot of people are using TA, technical analysis, to kind of figure out where the prices are going to go next. And they're using data that is very often skewed as opposed to what's actually happening in reality. So Sentiment's mission from the very beginning was to try and find better, more reliable sources of information for you to actually analyze the crypto markets, to understand the behavior of the different stakeholders and the people that are actually, making market moving, price moving moves. And in the last 3 years, I think we've done quite a good job at doing exactly that. So we've developed over 150 different indicators and metrics, many of them developed in-house. And none of them are really utilizing pricing data as their primary source. So just very quickly, most of our sort of indicators and metrics that you can find on sentiment.net leverage one of three sources of information. So probably the biggest information source that we leverage is on-chain data, something that is completely unique to crypto, and is, I think, one of the biggest sort of distinguishing factors between how you can evaluate traditional assets versus digital assets, is the fact that pretty much every transaction that has ever been occurring on the blockchain has been recorded and is publicly available. And this sort of wealth of data allows you to do analysis that are, pretty much impossible to do with traditional stocks. So we run our own nodes on a variety of blockchains, including Bitcoin, Ethereum. We have on-chain data for pretty much, I would say, all of the top 10 coins, and then hundreds of different ERC20 or Ethereum-based coins as well. So, we can go later in the stream into some of the on-chain metrics that we provide on our platform. They range from very simple stuff, like the amount of addresses that are on a daily basis interacting with a certain cryptocurrency. Like, for example, if you want to know how many addresses are today sending or receiving Bitcoin. That is something that you can find out on our platform. And then it goes into some very advanced, very sort of unique and niche indicators for spotting pricing shifts, maybe trends in the or changes in the behavior of stakeholders. So that's sort of the first big source of information that we utilize on our platform. The second one is social media data. So we've actually, over the last 3 years, we've developed our own sort of custom social data set. We now track over 1,000 different cryptocurrency specific social media channels. So that includes, Telegram groups, crypto subreddits, Discord channels, Twitter personalities, professional trader chats, pretty much everywhere that we know that the conversation around cryptocurrencies is being held. We track those messages, we track those comments and conversations, discussions, and then we create unique indicators and metrics on top of that data. And so far, the social indicators that we've developed have proven very effective in particularly spotting tops for mid and low cap coins. And we can go into a few examples that I've prepared during the stream. But this is, for example, something that is quite unique to our platform. There's nobody else on the market that really has this sort of breadth of social media data. And we have also developed a custom in-house sentiment algorithm, obviously, hence the name. So what we try to do is not just let how much mentions of a specific coin or a specific topics is being held on cryptocurrency social media, but also what is the crowd's mood or what are the crowd's emotions about that particular topic. So for example, you will see a huge spike in the amount of mentions of Bitcoin and Bitcoin related terms today on crypto social media. Very, not very surprising given the fact that Bitcoin, I think, has jumped over 10% over the last 24 hours alone. But that information alone doesn't really tell you what the crowd is feeling. Is the crowd feeling particularly bearish or increasingly bearish towards Bitcoin's price potential, or is it pretty much full on the Lambo mode and believe that Bitcoin is going to go above 10K and maybe even 15K? So those types of things are also metrics and indicators that you can find on our platform. And then finally, the third source of information that we utilize on our platform is a development activity of cryptocurrency projects. So what we do is we track the GitHub repositories of over 1,000 different crypto-specific projects, and we try to understand, how much are cryptocurrency teams and projects actually investing into their coding manpower and into their product development. So this is also, I think, another sort of source of information that's not very prevalent in traditional markets, whereas in crypto, pretty much everyone has a GitHub repository that is completely public and that you can kind of tap into to figure out, okay, are these people still pushing code? Are they still committed to their roadmap, to delivering what they promised during the ICO days? Are people still kind of polishing their product? Are they planning new features? All of these things can kind of be gauged from the information, calculated from development activity. So these are sort of the three pillars of information that we use on Sentiment. As you can see, none of them really rely too much on traditional pricing data, just because, even now, the crypto market is still unfortunately kind of rife with pump and dump schemes. Sometimes, one or two whales can, crash the market or pump the market. But that doesn't mean that you can't make money on crypto, or that doesn't mean that you can't understand what is actually happening on the market. It just means that you need to, know where to look. And this is the entire mission of our platform, is kind of giving you the context behind market moves, so to speak. I know that was probably a long introduction. I'm sorry, but yeah, that's pretty much in a nutshell.
I think just for the viewers, a whale. So we're gonna give you a definition of whale. So if you Google the word whale, you're gonna see a very big mammal that lives in the ocean, right? Okay. In the crypto world, a whale is someone with a lot of money, right? Yes. So call them whales, right? What was the other term that I'm just trying to for the viewers who are not familiar with crypto, I'm really just trying to bridge that gap.
Right. So essentially, yeah, as you mentioned, whale, pretty much an address with a lot of specific coin, right? Obviously, what is a significant amount of a coin kind of is relative to the price of the coin, but at the end of the day, anyone with maybe more than 500,000 US dollar worth of a specific coin can often be considered whale. Some people obviously have different definitions of what constitutes that lower threshold for quote unquote whales, but these are just essentially addresses with a lot of a specific coin and the potential to pretty much impact the market in major ways. The retail sector of cryptocurrency, sometimes they're called fish, as a kind of basically a complete opposite of a whale. But yeah, so on our platform
in Malaysia, we have another term. It's called ikan bilis. So it's actually anchovies. We're not even fish. Right.
Yeah, there you go. It's pretty much the same concept, right? The same idea. Yeah. But on our platform, you can actually track the behavior of both these whales or large addresses. You can see when they're accumulating a certain coin, which might indicate that the big players are sort of growing more fond towards a certain coin, and they have confidence in its short-term price potential. And you can also see instances where whales are starting to dump on the market or starting to move their bags and move coins from their addresses, which might be a yellow flag, so to speak, as far as the coin's price action is concerned, especially when you see these big addresses starting to make moves during a coin's rally. Putting that in a higher market context, I think, can very often indicate a short-term sort of correction, is what we found just from anecdotal analysis, so to speak.
I think just for our viewers as well, just addresses, when Dino refers to addresses, think of it as your CDS account or a wallet, okay? That's where your crypto is stored, right? So it's either, in a very simple term, it's either a crypto wallet, okay, or like your e-wallet, or our Bursa Malaysia CDS account, right? Or if you're from Singapore, it's your CDP account, okay? Or I guess in Australia it'll be chess, right? Okay. So just to give you guys some context, sort of to glue everything together.
Yeah, I appreciate you kind of dumbing it down for me, because I'm not, usually I use these terms on a daily basis, so sometimes I forget that they're not really universal for all markets, like whales and addresses.
Not yet.
Yeah.
Also, just for our viewers, Dino mentioned about the three pillars, right? So that third pillar where he talks about GitHub. So just to just for the reference of our viewers, when we talk about crypto projects, they're usually software projects, and most of them is open source software. And so when it's open source software, what they do is they will upload their code onto a code repository, a website called GitHub. And so Dino was talking about tracking the activity on this code repository. That's essentially checking how much code is actually being written or being checked out, or new code being overwritten. So how active the project is after they collect that, after they take your money, basically from an ICO. Yeah,
pretty much exactly that. Yeah.
Back to you. Yeah. Hey, Dino, did you have any slides that you wanted to share?
I do. Well, I have a presentation ready. Didn't necessarily want to go through the entire prezo, but I thought it would be nice for people that are, joining the stream. Maybe they want to download it or see it after the fact. I have all of the examples that I've prepared for today kind of listed in that presentation, but I thought I would just share a screen and kind of give you guys an overview of the platform and some of the indicators that we use on a daily basis. I'll give you guys a few examples of how we can, spot price movements based on, on-chain and social data, and different valuation models that are maybe intrinsic to cryptocurrencies and can't really, be found in traditional markets as well. So if you don't mind, I'll share my screen.
Sure, please. Faiz, we don't mind. While we get into the screen, maybe for those who have just joined us, Dino is actually from Sentiment. They're almost like a equity striker equivalent for the crypto world. And today we're going to talk about, or Dino's going to be sharing us some indicators that crypto, if you're a crypto investor, what are some indicators that you can look like, like our FQA, our SWC. and he talks about one of the things that when you only look at price, it's only price, right? So they look at three main pillars, which is price. They also scour all social media websites to figure out the sentiment on the ground of what people are talking about. And the third thing that they actually track are actually when all these crypto projects, they have, like what Andrew was saying, they actually have this code base. So they check how frequently that code base is being updated. All right. Look, if you guys are a little bit confused, don't worry. Andrew, we're gonna start running some basic crypto classes in the ET Online campus as well, right?
Sure. Yeah, we can do that.
Yeah, we're gonna really give you a easy intro into what crypto is. All right.
So stay tuned.
Yeah.
So can you guys see my screen?
Yeah.
Yes.
Okay, so just a quick introduction for people that are unfamiliar with our platform. I strongly suggest checking sentiment.net. Starting from here, there's quite a lot of information, including links to different use cases of how you can use our data. A variety of features are explained here, and then links to different products that we have. So the sort of most newbie friendly, so to speak, product that we do have is called Sandbase. It's found at app.sentiment.net. This is what you're looking at the moment. And this here on the left, you can see a list of metrics that are currently available on Sandbase, and you can essentially see the same sort of distinctions that I've just made. So the financial data is here first, just basic information about a coin, including its market cap, its price, its trading volume. And then the next sort of batch of data sets is social data, including, social volume, social dominance, the amount of Twitter followers for that particular project over time. And each of these metrics has explanations as well as videos on our platform. So no worries if you're completely new to the market, you don't know what a specific metric means. There's quite a lot of educational materials within the platform itself that you can kind of fall back on. So the third one, development activity, you can kind of click on, just for example, let's click on the development activity here, and then let's say if we look at the development activity overall time. So currently we're looking at Bitcoin's development activity overall time. So as you can see, it's still growing at a fairly rapid pace. Even though Bitcoin is not necessarily planning to do any sort of major revolutionary moves in their code or in their underlying technology, unlike Ethereum, which is now preparing for Ethereum 2.0, a scaling solution. But there's still a lot of maintenance work to be done in Bitcoin itself. And then finally, a lot of different on-chain metrics can be found here. As you can see, there's quite a bit of them. And so what I wanted to kind of start with maybe is, let's start with some basic examples of social data, because I think that's probably most easy to understand for people. And then we can jump into some more difficult concepts as we go along, like, a few on-chain metrics and how to read them. How's that? Does that sound good?
Yeah. Sounds good.
Okay, so first of all, as I mentioned, so on Sentiment, we track over 1,000 different crypto-specific social media channels. And one of the basic things that we have developed with this data is the social volume metric, which essentially plots the amount of mentions of a particular coin over its price over time. So for example, you can see just today, right, that there's been a massive spike in the amount of mentions of Bitcoin on the channels that we track. So over 8,000 different mentions of BTC or Bitcoin or related terms to the Bitcoin's name just in the last 24 hours. And these types of major spikes or extreme spikes in social volume can often be indicators of a paradigm shift in the market. So this is a 1-year view of Bitcoin social volume, and as you can see, pretty much all of the spikes in the past have kind of indicated some sort of market correction or a market bounce back. It can be both ways, especially for Bitcoin. So here you can see the social volume spiking at this interim top. The very top in the 2019 correlated with the biggest spike, the 1-year high in terms of its volume. And then here you can see the same sort of spike right as Bitcoin was peaking. And then several bottoms were also earmarked by spikes in social volume. You can see it here, here, and here. And of course, you can see here, this is the so-called Black Thursday event. I don't know if you guys call it that in the traditional markets as well. Yeah. So essentially, when the entire world financial market crashed, both in terms of traditional markets, stocks and cryptocurrencies, you can see sort of the spikes in Bitcoin-related social volume. And finally, the crowd is starting to ramp up its talk about Bitcoin once again. So if you were kind of looking at historical trends, this could be a semi-warning sign that the hype around the coin is starting to peak a little bit. This doesn't mean that it can't chart a new high, or that nothing might happen in the very sort of imminent future. But it's definitely a yellow flag for people that are interested in investing in a coin like Bitcoin at this particular moment. So a few things that I wanted to show about social data. This is something that we have kind of realized after we've developed these metrics, is that they are extremely effective in spotting price stops, forming price stops, particularly for low and mid cap coins. Obviously, this applies to Bitcoin as well, as you can see, but very often when it comes to coins that don't have that much of a market cap, and their trading volume isn't really parallel to Bitcoin just yet, when you see these kind of spikes in social volume for these coins, usually during a price rally, right? That means that the mainstream crypto community is starting to pay very much attention to this, relatively unknown coin. And when that happens, it usually indicates that the hype around the coin is peaking. The mainstream crypto community is kind of moving into the coin, and that's usually the time that we see a correction over the next couple of hours to days. So I have a few examples that I've prepared for this particular sort of phenomenon. Let's see, social volume. All right, so let's look at some very basic examples. Obviously, I don't think it's going to be this sort of apparent on each and every coin's chart. But for example, we're looking at an altcoin called Engine, ENJ, and this is the price of ENJ over the last 3 months, plotted against the amount of mentions of Engine on crypto social media. And this is a very often what we see. We see these massive spikes in Engine-related social volume right around the tops, and then as the hype around the coin starts to deflate, and people kind of move on to other coins, the price is usually no longer able to sustain itself, and we see corrections very much over the span of the next couple of days. So you can see extreme examples of this here. You can see smaller examples of it here and here as well. So both of these kind of spikes in social volume earmarking the short-term corrections in the coin's price action as well. So maybe a few other examples that I've just to kind of drive the point home, right? This one is Stellar. So I think some people might even be familiar with Stellar or XLM. Kind of, if people are familiar with Ripple, which I think a lot of people are, very often people kind of conflate the two, XLM versus XRP, which coin is kind of going to capture that same market. So for XLM, you can see similar trends in terms of its social volume over time. So here at the very sort of top in 2020, February 15th, you can see the correlating spike in Ripple social volume. You can see another one here right before the coin started consolidating. So basically earmarking this very interim top, and then here once again before this slight consolidation as well. So this is sort of what we have found over time, is that our social media tools have actually been pretty effective in spotting tops. And one of the things that we then wanted to do is we wanted to backtest this idea, right? By the way, are you guys kind of following me so far? Do I need to explain anything before I move on?
No, I think we're good, Alvin.
No, I think this could also be implemented to stocks as well. I mean, this is really good. If we track basically how much interest is there in the internet, right, or the social media space regarding a certain coin, or it could be a stock as well. This is a bit predictive analytics. Is very useful.
Yeah, I agree. This isn't something that is necessarily endemic to cryptocurrencies, but it's one of the things that we've kind of developed in house. And as far as I know, there is nobody else that kind of offers this type of data currently out there on the market. So one of the things that we've kind of built on top of this social data set, we call it emerging trends. So you can go to app.sentiment.net, and then you can click on labs and go to trends. So what trends does, trends is essentially a list of 10 words that are currently gaining the most social volume on crypto social media, at least relative to its previous 2-week average. So what we're trying to find here is we're trying to find new trends that are currently developing within the cryptocurrency community. What is the cryptocurrency community talking about the most over the last 24 hours? What are the emerging topics, so to speak? And as you can see, currently today, there's a lot of talk about FOMO, which is fear of missing out, basically connected to the price of Bitcoin. I guess a lot of people currently believe that the Bitcoin is growing because a lot of people are FOMOing into Bitcoin, which means they are buying Bitcoin out of fear of missing out, or out of fear of the fact that the Bitcoin might go above 10K, 15K, so on. BTC, or the ticker for Bitcoin, is one of the other top words currently on crypto social media.
I think if you search for FOMO with stocks as well, you're probably going to get the same thing.
Okay.
I've been getting a lot of questions like, hey, because we've been covering stocks the last couple of weeks, and people are now starting to ask, so do you think it's time to buy, but after stocks have jumped 50%, right? So, FOMO is real,
It is. Yeah.
Any market is real, right?
I mean, it can move markets quite literally. So yeah, currently the FOMO is the top trending words on the channels that we track. And then this is a funny one. If you're kind of not familiar with memes in cryptocurrency communities, you might be wondering why the heck is Vegeta trending as one of the top words in cryptocurrency communities. So the reason why it's trending, I don't know if you know this Vegeta meme. So
I thought it was vegetable,
So Vegeta is a character from Dragon Ball Z, right? Or Dragon Ball, the animated series. And there's this meme where it looks at a power level of Goku, and he says it's over 9,000, and he breaks his power meter or whatever. So the reason that this Vegeta is trending currently in crypto is because Bitcoin is currently at 8.869, which means that it's almost over 9,000, right? So this is a very common meme in cryptocurrency community where people, as Bitcoin kind of approaches this level of price action where it's starting to break 9K, you'll see quite a lot of Vegeta memes on crypto social media. So this is the reason why it's trending. But anyway, I digress. So this is one of the tools that we've developed, and what we have found is that whenever a coin's ticker, so the name of the coin, like BTC or XRP or EOS, whenever the name of the coin appears on this list of the top 10 words currently trending on social media, especially when it appears as the coin is kind of in an uptrend or as the coin is pumping, this is usually a very good indicator of an incoming correction. So we've done some initial backtests on this phenomenon, and I can share I can share some images. So this is from an article that we're currently writing. What you're seeing here is you're seeing so there's a 0 here, right? 0 is the moment that an event triggers. In this case, event is a coin's name appearing on this list. So this blue line is the average price of the coin appearing on our emerging trends list in the 14, 12, 10, so forth days before it appears on our list. So you can see that it usually starts pumping quite heavily, especially in the couple of days before it starts appearing on our list of emerging trends. And then this is the coin's price action in the week and then 12 days afterwards. So you can see that very often, pretty much almost instantly after it appears on our list of emerging trends, it starts declining. The price of the coin starts declining. The orange line is the general sort of benchmark or the movement of the entire market over that same time frame. So we've used this. This is based on 200 different coins that have appeared on our list, especially or particularly the coins that have appeared in the top 3 words, because that's kind of the strongest signal. And these are some early results. So it's very much, kind of data driven, that what we're trying to do from a social perspective or social data perspective. It seems that, as the crowd starts gaining more and more attention towards a coin, especially if that coin is in the middle of a monster rally, which is often the case, that is usually a good time if you're invested in that coin. Obviously, no investment advice. That can be a good time to kind of rethink your positions. Let's just, put it that way, right?
Yep.
So you guys have pretty much been able to quantify something that is qualitative, which is sentiment, right?
Yeah, so that's one of the things that we're trying to do. So here you can actually not only look at the, so what I've showed you here is you can look at the social volume of a particular coin over its price, but you can also just enter any word whatsoever here, and it pretty much works like Google Trends for crypto. Like, you type a word and then you see what is its amount of mentions on crypto social media. So we have a few examples here that I wanted to showcase. This is the dark mode. Let me just, yep. So here you're looking at, so basically what I did, I typed in Corona or coronavirus or COVID-19 in this box, and this is the output that I got. And you can kind of see a very interesting inverse correlation here between the price of Bitcoin, which is the green line, and then the amount of COVID and coronavirus mentions on crypto social media over time. You can essentially see that the peak was right here at the Black Thursday event, and then as it sort of started declining into its sort of pre-pump levels or pre-dump levels, the price of Bitcoin started recovering more and more. So if you really want to kind of just play around with the platform and see if you can find different social correlations, this is, I think, the best place where you can start. And then, yes, as you mentioned, we do have some sentiment metrics as well. We're trying to quantify the mood of the crowd as well. So these are experimental metrics, but maybe I can show a few of them just now. So as I mentioned, currently here you're only looking at the amount of mentions of a coin, which, although interesting, doesn't necessarily tell you what is the crowd feeling, what are the crowd's emotions or moods toward Bitcoin in this particular case. So here we have developed a sentiment algorithm in-house, which tries to kind of look at the difference between the positive and negative sentiment, and then figure out, okay, what is the average sort of sentiment of for a specific coin over time. The way we do that is we run all of the messages that we collect on a daily basis. We run it through our sentiment algorithm. About 70% of them we can really attach a positive or negative meaning towards. All of the other, or all of the rest, kind of gets filtered out because we don't necessarily, we don't want to overfit the model. So if certain messages our model is unsure of, they're ambivalent, or they're not really, he's not really able to figure out, is this positive or negative, we will remove those mentions and only focus on those that we can kind of effectively label. So one of the things then that we have developed is this particular metric. It's called Bitcoin Sentiment Volume Consumed. I know that it kind of sounds a bit complex, but essentially what it tracks is the difference between the positive and negative mentions of a particular coin, and you can change the coin here. All of the coins in our database can be kind of tracked, and then you can select.
We actually have a question from the crowd. Could you also show us Ethereum as well?
Yes.
Thanks.
Of course. So very quickly, and this is quite interesting. I've also checked this. Pretty good question. I've checked this before the call as well. So even though you're seeing this massive spike in Bitcoin mentions over the last 24 hours, there hasn't been a correlating massive spike in the amount of Ethereum just yet. Of course, yes, it's been trending upwards a little bit, and you can see that spikes in Ethereum mentions have kind of correlated with local tops over the last 3 months as well. But so far, at least relative to Bitcoin social media numbers, Ethereum has kind of been, on the down lows. And so you can, here what you can do is, let's look, for example, let's look at Ethereum. And here you can select either of the channels, social media channels that we track. Let's say we want to look at Ethereum sentiment on Twitter specifically. And let's select maybe the last year. Okay, one sec. So from April of 2019 until today. So there's a bunch of different metrics that I'm just going to skip over because it would take hours to explain.
Okay.
And so yeah, currently what you're seeing is, particularly on Twitter, the sentiment towards Ethereum is now starting to delve into negative waters, or the average sentiment on Twitter is kind of going towards negative for the first time in about, what is this, 2 weeks, right? And so you can also see kind of historical patterns for these sentiment metrics. So you can see these massive spikes in Ethereum-related sentiment on Twitter, this particularly, or we can look at other channels as well. But essentially, very often, this is pretty much in line with what I already explained. Very often, we'll see these massive spikes in positive sentiment towards a coin. Everybody's happy. Everybody thinks that the coin is going to go to the moon, as usually people in the cryptocurrency community call it. We're all mooning. We're all going to get Lambos, stuff like that. And this is usually a very tough time to get into the market. This is the time that whales start dumping on the market. This is the time that a lot of people, smart money, starts cashing out. And this is pretty much what happened for the last couple of tops for Ethereum, right? These massive spikes in the positive sentiment for Ethereum have correlated with price corrections. Currently, however, we're actually seeing a divergence between the price of the coin and the sentiment, particularly on Twitter. So the Twitter sentiment is now trending downwards over the last couple of days as the price of Ethereum has started growing. The Twitter community in particular, or crypto Twitter, has started becoming more and more bearish towards Ethereum. Now, take this for what you wish. Usually, the negative sentiment can be quite a positive factor for the market. If you can see it here, there's been this big drop in the Ethereum-related sentiment right before it started rallying. The same thing here. So it's not necessarily that if you see an average crowd or community sentiment veering into negative, that's a red flag or a warning sign for a coin. It can be quite the opposite as well, right?
So Dino, we actually have a couple of questions here. So one of the questions is, how would you consider like a positive or negative in terms of sentiment? And how do you guys get past bots, bots on Twitter, or even spam on Telegram? How do you guys how do you guys clean that data?
That's a great question. I like the fact that your audience is very much in tune with what we're trying to figure out as well. So one of the things that we're trying to do, for example, you'll see here this Ethereum Twitter spam index. We are trying to, one of the things that we're trying to do is we're trying to exclude all of the kind of duplicate messages for any specific channel that we're tracking. So Twitter and Telegram are particularly notorious about basically spamming the same message time and time again. So for these sentiment metrics, what we're trying to really do is we're trying to exclude all of the duplicate mentions, the same copy-paste messages, and only focus on the unique messages, so to speak, unique messages about a particular coin. And this is, very interesting that I mentioned it. I'm just looking at it now. So Ethereum's Twitter spam index has been on the rise over the past couple of days here, essentially meaning that, as Ethereum has started pumping, the bot activity has also started pumping as well. Yeah, it's a very good question. I don't think necessarily that we're 100% there. Our data scientists and developers are definitely working on additional solutions to filter out some of the noise, but it is a problem that we're very much aware of and that we're trying to fix by, for one example, excluding some duplicate messages. And as far as how do we figure out what's positive and what's negative, as I mentioned, so I'm not a developer myself. Probably if you guys would like, I can connect you with one of our data scientists, the guy that has been in charge of this project, to really talk about what goes on inside of social media algorithm. But I definitely know that it's mainly been trained on Twitter data in particular. That's why Twitter data is usually the most reliable as far as sentiment analysis is concerned. So we've trained it on tens upon thousands of Twitter messages, run it through our custom, sentiment algorithm, machine learning algorithm to, make it learn what are the typical positive mentions versus typical negative mentions, and then kind of plot it against the price of a coin over time. like I said, that is usually a bit above my pay grade as far as understanding what exactly that means and how exactly it's calculated. Very happy to kind of connect you guys to one of our data scientists if you want to really understand what goes into the back end of this thing.
Okay, well, what about positive and negative sentiments? That was just the second part of the question. How would you filter something like that out?
Yeah, it's pretty much the kind of the same answer. So as far as actually understanding how what is the positive versus negative messages, the algorithm kind of determines that on a number of set of rules and machine learning sort of conventions. And then one of the things that you can see here, for example, you can see so this particular chart, it distinguishes between positive and negative sentiment, right? So here the green is the positive sentiment towards Ethereum, and then the red is the amount of negative messages related to Ethereum over time. So if these two charts are kind of trying to conflate the two and figure out the differences between them. Whereas this one really, kind of lays it out, tries to establish differences between, okay, this amount of mentions are positive, this amount of mentions are negative on any given day. So, for example, why are you, even though the negative messages you can see here are over the last year, they've always been below the positive messages. So why is it that sometimes we're seeing these negative spikes or drops below zero? So the reason for that, without getting into like too many complicated concepts here, is that this particular chart, it weighs or it adjusts its sentiment sort of score based on the amount of mentions as well. So what it does is it looks at the differences between positive and negative messages, and then it adjusts it for the actual amount of volume, because it's not the same if there's quite a little bit of mentions of Ethereum on crypto social media relatively, but there's a huge spike in positive mentions, right? Whereas if there's a huge amount of mentions and there's a sort of neutral territory, those two things can be sort of, if you represent them equally on the chart, you'll get skewed results. So this particular chart is adjusting the sentiment of the crowd based on the amount of mentions of a particular coin over time.
Yep. When we had a chat 2 days ago, I think we were talking about the latest news really about the amount of USDT or stable coins that's actually making its way into exchanges. Did you want to share a little bit about that?
Yes, I did. So I think as far as our social data is concerned, this is as far as we'll go in this particular conversation. You guys are more than happy to there's a lot more that I shared in this document. I'll share a link to it so you can kind of explore it further. But yes, thanks for bringing me back into the on-chain world just a little bit. So one of the things that I mentioned to Andrew a few days ago when we were talking, and I wrote about this last week before, or actually as Bitcoin started finally, kind of pumping, is this interesting correlation between the price of Bitcoin on the one hand and the on-chain activity of stable coins. So Andrew, do you want to, should I kind of explain what stable coins are? Maybe you can kind of explain it into terms that are more.
Okay. So to our audience, a stable coin basically is one USDT, or can be one USDC, or it can be one TUSD, right? So these are token representations of what the equivalent in fiat currency is. So one USDT is represents $1 US, and usually they're interchangeable, right? You can go to an OTC counter if you're not in Malaysia, and then that you'll get that in USD. Okay.
Yeah. So essentially, stable coins are low volatility alternatives to traditional cryptocurrencies. One of the biggest sort of concerns with people in the last couple of years was, I don't necessarily want to get paid in Bitcoin, because between the time that I, the transaction is sent from my employer and I receive Bitcoin, Bitcoin might have fallen by 20%. Well, not 20, not anymore, but maybe 3%. It's still quite a significant drop. So one of the, as a response to that sort of demand, stablecoins emerge. So the concept behind stablecoins is that they should be relatively stable. So they might, deviate a few cents, but they should, and most of them are pegged to the US dollar. So some of the most popular ones are Tether, which is currently 101, USD Coin, which is currently exactly $1, True USD 101, and Binance USD also 101. So one of the things that we have seen in the crypto community get a lot of attention over the last 40 days, basically since the price started crashing, right, is that more and more people have been kind of moving away from the cryptocurrency markets into stable coins. One of the ways that we can kind of see that happening is on our charts. So I wrote about this maybe a month ago. I wrote that as far as our stablecoin on-chain data is concerned, we're seeing more and more stablecoins flowing into stablecoin addresses, essentially. So let me find that article that I wrote. You can see, so example, on insights.sentiment.net, pretty much on a daily basis, we are writing articles about, how can you read this data of ours? What does it mean? So even if you're not really familiar with the concepts, you can kind of get the general idea. Okay, let me see, maybe I can check on my, there we go. I click on my profile and we can see all of the insights that I wrote recently. So I just wanted to show you guys, or actually I have it here. Oh, okay, I have it in this article as well. Let me, so this is the first one that I wrote. This is right after the correction. Is everyone FUDing into stablecoins? FUDing is an acronym for fear, uncertainty, doubt, which, the question is everyone kind of moving from general cryptocurrencies like Bitcoin, Ethereum, and the most popular altcoins into its more stable alternatives? And so the answer was a resounding yes. So one of the charts, for example, that I think shows this very effectively is this one. So, okay, it's going to take maybe a few minutes to explain what you're looking at here. So you're looking at the top 100 addresses that are, addresses means wallets, right? That are holding USDT Tether. So this is one of the stable coins over the last 3.5 months at the time that I wrote this. So essentially, this was the Black Thursday event right here. And since then, you can see that the amount of stable coins that has kind of gotten into these wallets, that has been moved into the biggest stablecoin wallets, has increased by about 40%. So it went from $700 million to just above $1 billion, or billion USDT. So this was, and you can see kind of the same sort of trends across both, retail crowds. So this is, for example, people that are owning between 1,000 and 10,000 Tether. It's the same sort of move, right? There's been quite a bit of nothing, and then ever since the Black Thursday event, they started moving more and more into stable coins over time. So this was the basic premise of this article, and something that has gotten a lot of press in general in crypto is that a lot of people seem to be scared about the market, and they're moving into stable coins. And one of the things that I mentioned in this particular article at the end here is that how do you know when the market is recovering? So I said I would keep an eye on the behavior of Tether and USDC holders in the next days. If we see whales and retail holders start to kind of offload their bags or move their stable coins back to exchanges, the only reason why you would move stable coins back to exchanges is to kind of convert them for Bitcoin, Ethereum, and other more volatile counterparts. And especially if you see a corresponding spike in the amount of stable coins flowing to exchanges, which we can also track, this is the time that you might see a recovery in the market. So this is exactly what happened before Bitcoin started pumping. And I'll show you a few charts to kind of explore this particular phenomenon. Okay, so let's start with USDC because I think it's probably the most apparent example. So here, this is a screenshot from Sandbase. We're looking at the amount of USDC held in the biggest non-exchange wallets, basically the amount of USDC held by the biggest whales versus the price of Bitcoin in purple. And you can see that they've started offloading here right around the interim bottom here for Bitcoin. So they started moving their bags after pretty much accumulating for quite a long time as Bitcoin started bottoming here, which were sort of the first signs that the whales are starting to move their bags maybe back into the market. We have seen the same pattern with other holder categories. So here, this is also a screenshot from our platform. We are looking at the addresses that are holding between 1 million and 10 million USDC. So also very big players. So this is what they started to do as I was writing the article. They started dumping. So this is from 230 million to 200 million drop. So 30 million have been moved away from these addresses, presumably to exchanges, and we'll confirm that in a moment. And the reason why they would do that is very likely to kind of start hoarding Bitcoin and Ethereum and all of the other altcoins as they started bottoming out, right? So the thing that helps us confirm this theory that all of these people are now moving their coins back to exchanges is the exchange inflow of a coin. So we have this metric called exchange inflow, which tracks, this is the brown versus the price of a Bitcoin, which is in purple. So here we're looking at the inflow of USDC into known exchange wallets. And this spike here correlates perfectly with what we've seen in this, the drop in the amount of USDC held by big players. We are seeing 48.9 million stable coins being moved to exchanges right as Bitcoin started kind of bottoming out here. So this is not only for USDC in particular. I mentioned for TrueUSD, there's the same spike in the exchange inflow. For BUSD, there was a same spike in the exchange inflow. So pretty much all of the top stable coins, and for Tether as well, which is the biggest stable coin, there's the exchange inflow spike right at the center at the local bottom for Ethereum. So there's been this spike in the amount of all of the top stable coins being moved to exchanges, presumably to buy Bitcoin and other altcoins, especially for USDC. The most active trading pair is BTC versus USDC. So we are assuming that a lot of these coins are being moved to exchanges to buy Bitcoin, and this is exactly what happened in the aftermath. So if I, for example, click through to this particular chart, it will take me to Tether's. Versus the price of Bitcoin. So this is the spike that I was talking about in the article, and then this is sort of what happened afterwards. And we can compare this with other coins. So for example, let's look at USDC. Same thing. So we're looking at the exchange inflow, the amount of stable coins moving to exchanges right before Bitcoin started pumping. We can see this sort of elevated buy pressure, right, across the market. For the first time in pretty much 40 days, we have seen big stable coin holders, whales, so to speak, starting to move their bags. And then correlated with that is this huge amount in the inflow of these coins to exchanges. And this is exactly what I said in my article. When the whales start moving their bags, and especially if there's a corresponding spike in the inflow of stable coins to exchanges, it might suggest a market-wide recovery. So I wrote this in March, and this is what happened in April of 21st, 22nd, 2020. So it's these types of things that we try to track on our platform. The correlation between different coins, the on-chain behavior of the relevant market stakeholders, and how they can impact the price of a particular coin.
So Dino, what happened today? Because Bitcoin shot from what 7,000 something up to 9,200 and back down to 8,008.
Let's look. So. Okay. So this is the event that we were talking about, right? The big inflow in Tether in particular. So we have seen this right here, right at the sort of before the first correction. We've actually seen, a small spike in exchange inflow. But if you look at the relative numbers, it's actually not that high, right? It's sort of, okay. Well, this is, I think it kind of skews the data when it's a longer time frame. Yeah, so we're seeing still some buying pressure being added here before this additional top. So here at what is it? Bitcoin was 8.3 when it started, when the latest spike in the amount of tether flew into exchanges, and then now it's 9.3. So this is probably the same sort of idea applies. Now I can go into quite a bit different indicators and on-chain metrics, but I don't necessarily think that we have time, that might suggest that a correction is imminent, or that might, well, not imminent, but that there are some red flags in the on-chain behavior of Bitcoin. But yeah, it seems like there's still, like for example, let's look at USDC. That's also a very relevant stablecoin. Not a lot of inflow actually for USDC over the last couple of days. So since this massive spike, which kind of prompted the rally, I think, in a lot of ways, there was one here in the sort of the middle part of the rally, and then since then, not that much buying pressure at the very top, which isn't necessarily, you know, unsurprising.
Cool.
Yeah. So
very interesting. Yeah. So based on that indicator, I guess a lot of our viewers might want to know. You know what I'm going to ask, Dino? What's going to happen next?
Okay, so I don't want to give like straight up financial advice here, nor do I know, right? The only thing that I can do is I can read the charts and I can kind of assume what or I can let you guys know what these indicators have been, you know, in the past have been saying. So for example, here we're looking at the Bitcoin charts now. We're looking at the exchange inflow for Bitcoin specifically, and we can see this just currently as we were discussing, this massive spike. So if we look at, well, let's see how massive it is compared. Yeah, so it's not that massive compared to the Black Thursday event, but it kind of messes everything up. So this is why I like to look at the shorter time frame, because compared to Black Thursday, all of the charts are irrelevant. So we're seeing this elevated activity in terms of the amount of Bitcoin that are being moved to exchanges, which is kind of can be a different type of signal compared to the amount of stablecoins being moved to exchanges. Because if you're moving stablecoins to exchanges, the premise is for a lot of people that they're going to be using that money those stablecoins to buy into assets like Bitcoin, Ethereum, and so on. Of course, there are other use cases, but they are not as prevalent. Whereas if you're moving a lot of Bitcoin to exchanges, the premise could be that, you know, these are people that are trying to take advantage of the rally. And you can see that this is, let's look at the last week. Yeah, so this is kind of what happened pretty much on point here at the very top. So as Bitcoin was peaking, as it was around 9.4, there's been a big inflow of Bitcoin to exchanges, so a rising sell pressure essentially, which kind of drew the price down a little bit. So this is one of the indicators that I would keep an eye out on. If I see another move upwards, I would keep an eye on the amount of Bitcoin flowing to exchanges to kind of indicate to me that there's a rising sell pressure incoming. So that's one, right? The other sort of yellowish flag for me is this amount. So if we look at it for the last 3 months, is this amount of social mentions of Bitcoin. So as I mentioned already, I harped on it quite a bit. This sort of elevated activity among the crowd, as far as relating to a coin's price action, can often be a very sort of yellowish signal. If we look at the last 1 year, once again, so here we can see the same spike at the very top in 2019 for Bitcoin, at the top, interim top here. At the very sort of top here of its second push upwards, and then at several bottoms. But obviously, you need to put it in the context of the price action. So given the fact that Bitcoin is currently pumping, this might be a worrying signal, number two. And then finally, I'll look at the token age consumed. So this is, okay, I'll just briefly try to explain. This is one of the metrics that might be a bit more advanced, although it's not that difficult to explain. So what we try to envision with this metric, I'm not going to go into details of how you do it from a technological standpoint or from a coding standpoint, but the spikes in this particular chart or particular metric indicate that a substantial amount of coins that has not been moved for a very long time. So a substantial amount of coins that have been dormant, inactive, or idle, that have not moved from their
current address for a very long time. So basically people that hold on to Bitcoin in this particular case for a long amount of time. A substantial amount of those coins have started moving now. So this is not a top or bottom indicator in and of itself. It's actually just a volatility indicator or a sort of a signal that some big players that have been in the market for quite a long time are now starting to change their behavior a little bit. So if we look, for example, at this is in particular for Ethereum, very telling. If we look for Ethereum's token age consumed charts over the last, let's say, 6 months, you can see that these spikes correlate with very interesting events in its lifetime. So here, there's been a big spike in token age consumed, meaning that some old Ethereum that has not been moved for a long time, maybe people that have bought around ICO days, are now starting to move right before sort of this smallish correction here. And then there was a big spike in token age consumed around several of Ethereum's bottoms. So this one here, this one here, this one here, this one here, sort of an interim bottom before the top, obviously one around Black Thursday. And actually here I wrote an article on Sandbase saying that I think that Ethereum bottom might be found. And I got quite a bit of flack on it on social media, or our official Twitter account did. So let me show you guys just so that it doesn't sound like I'm making this up. So if you look at my articles recently, basically what I wrote is that I think given the spike in Ethereum's token age consumed right around the local bottom, I think that it might be bottoming out. Yeah, so here we go. Massive spike in Ethereum's age consumed, local bottom found. This is when I wrote about it. And I said, you know, based on the activity of this metric over the last 6 months, could this be an early indicator of a bottom? Obviously, you can never rely only on a single metric and say this is definitely what is going to happen. But I've seen other sort of metrics and indicators pointing to the same sort of behavioral shift. You know, this is what happened afterwards. So, for example, the fact that we're currently, for Bitcoin specifically, seeing this big spike in old Bitcoin moving can be a bit concerning, especially during an uptrend. And you can see that it's already kind of corrected since the spike. The premise behind this metric is very simple. People that have been in the market for a long time, they are strong hands. They are not going to be moving their coins from their respective addresses without doing very detailed analysis of the market, and without sometimes even being in the know about what's going to happen next. So it's very, you know, important for you as an investor or as just a person that is kind of looking at the market to know what people that have been in the market for a long time are thinking. And this is a proxy of, you know, the behavior of long-time holders and how they are perceiving the market at the moment. So the fact that we're seeing this spike in long-term holders moving their bags, and we see a correlating spike in the amount of Bitcoin being moved to exchanges. Well, obviously, you can see how big the spike it is because of the freaking Black Thursday event. But let me try and zoom in so you can see exactly how relevant it is. There you go. So these two, and social volume is third, they can kind of be, you know, indicators of a semi-correction. And I mean, that's already what happened, right? So I would keep an eye on these types of signals over the next couple of days to really inform your decision about where the coin might be going next. These are just a few. As I mentioned, I could go on for hours, but yeah, I don't think we have time.
No, but thanks for that. I'm sure a lot of our audience would appreciate what you've just shown us. So basically, what you've just shown us is that, you know, you don't just buy on, you know, rumors or news. You know, this is to show that there's actually a lot of data out there that you know, potential investors who are looking at maybe dipping their toes into the crypto world, that they can actually look into. And you know, to me, it looks very transparent, right? Obviously, you need the right tools to get to that information, which is what Sentiment provides. Then that allows you to see what's actually happening on chain, right? Plus, you know, the sentiment analysis, obviously.
Yeah.
but I think, Alvin, we might be coming pretty close to the end, yeah?
Yeah, we are.
So let me just, for everyone listening, just wanted to let you know, in the slides, where can I share these slides, by the way? Maybe I can.
You can send me. You can just PDF them and send them to me after, and then we'll put it up on our.
Okay.
Yeah.
But anyway, everybody that's listening, if you want to get full access to this platform, so what we've been looking at is the Pro account on Sandbase Pro. It's $49 a month, and essentially you get full historical and real-time data for all of the metrics, as well as a bunch of other perks that are listed on the pricing page. So if you really want to kind of just go ahead and play around with this for yourself, there's also a 2-week trial before you actually can pay for the platform. So go to app.sentiment.net, and when you go to the pricing page, enter the code ET for Equities Tracker _SAN, and you'll get 25% off as well, either for a monthly plan or a yearly plan, whatever you choose to buy. And become a part of our community. You get to join our Discord, where we talk about trades and different market events on a daily basis. I think anybody that wants to kind of start dipping their toes, this is a retail-friendly platform. The price is not big. We just want to kind of open it up to as many people as possible. So if you really are interested in data-driven decision-making and just data-driven analysis of the market, this is a pretty good place to start, I think.
That's fantastic. Yeah. Alvin, I'll let you close up. Hey, just want to thank you for sharing that with us, and thank you for your time.
Thank you guys for having me. Anytime that you guys want to talk about crypto, if anyone from your community has any additional questions, join me, on our Discord. My name is @IBIS, or you can ping me through Equities Tracker, I guess, and we can follow up on any sort of conversation that you guys want. But thank you once again for having me. I had fun.
Yeah, we'll add you to our Telegram group, right?
Sure, sounds good.
Yeah, we'll definitely.
So we have a Telegram for all our subscribers. So we can add, and we can chat more offline or online actually. Look, thank you all for joining us. As you know, our Chinese session has started about 7 minutes ago. Tomorrow we have an exciting topic. We're going to talk about technical analysis of momentum trading versus value investing, right? Which is better? Which one should you pick? So Benny and myself will be back tomorrow night at 8 o'clock to talk more. Otherwise, we'll see you guys tomorrow. Thank you very much for joining us. Thank you again, Dino.
No worries. Thank you, guys. It was a pleasure.
See you guys. Bye-bye.
Thanks, Dino. See you.
Bye.